Good day, investors. SpaceX just dropped its first full quarterly report as a public company, and the growth was massive. Revenue nearly doubled year over year, adjusted EBITDA almost tripled, and they ended the quarter with a fortress balance sheet and a huge backlog. In this video, we'll break down the Q2 numbers in detail. After that, we'll look at the long-term opportunity for SpaceX, then dig into price targets and valuation. And finally, I'll give you my personal take on why I think SpaceX could be a great investment opportunity right now. But before we get into it, leave a like for the algorithm and subscribe if you haven't already. Thank you. All right, let's dig into the actual Q2 numbers. SpaceX reported revenue of $7.8 billion, up 92% year over year from $4.1 billion. Adjusted EBITDA came in at $3.5 billion, up an insane 191% from $1.2 billion last year. Net loss improved significantly to $541 million, down from a $1 billion loss in the same quarter last year. Now looking at the business highlights, they demonstrated the real power of extreme vertical integration, growth across all three segments: space, connectivity, and AI. Two successful Starship V3 flight tests in the last 90 days, moving closer to full and rapid reusability. They closed multiple major cloud services agreements, totaling $14.1 billion in contracted sales. Announced a $60 billion agreement to acquire Cursor to accelerate the AI enterprise opportunity. Released their most powerful model yet, Grok 4.5, in July. On the connectivity side, revenue grew 66%, and income from operations grew 79% year over year, driven by a full doubling of Starlink subscribers, plus strong enterprise and government momentum. And they were awarded over $6 billion in multi-year U.S. government contracts for Starshield. Overall, revenue growth accelerated across every business segment. They delivered strong operating leverage, and the new AI compute agreements are already driving meaningful margin expansion. This was a very strong first public quarter. Now let's look at the breakdown by segment. Revenue in the quarter came in at $7.8 billion total. Space contributed $962 million. Connectivity was the largest at $4.3 billion, and AI jumped significantly to $2.6 billion. Looking at profitability, connectivity is clearly the cash engine right now. It delivered $1.66 billion in operating income and almost $2.6 billion in adjusted EBITDA. The AI segment is still investing heavily and posted an operating loss, but it flipped to positive adjusted EBITDA of $1.15 billion this quarter, which is a big improvement. On the CapEx side, you can see where the money is going. SpaceX spent over $15.8 billion in the AI segment alone this quarter as they rapidly scale compute capacity. Total CapEx for the quarter was $18.4 billion. So the story here is clear. Connectivity is generating strong profits. AI is scaling extremely fast and starting to show operating leverage. And the company is investing aggressively into the future. Now looking at the balance sheet. SpaceX ended the quarter with a very strong cash position. Cash and cash equivalents stood at $93.5 billion, plus another $6.5 billion in marketable securities. That's a massive increase from the $24.7 billion they had at the end of 2025, driven largely by the IPO proceeds. Total assets more than doubled to $192.8 billion. On the liability side, total liabilities came in at $65.5 billion. Overall, this is a fortress balance sheet. They have enormous liquidity and financial flexibility to keep investing heavily in Starship, Starlink, and AI infrastructure for years to come. So after looking at the Q2 earnings numbers, let's zoom out and look at the actual business and the long-term opportunity. SpaceX is the only company building a fully integrated hardware and software platform across three massive verticals: space, connectivity, and AI. The foundation is still the launch business. They control more than 80% of the world's mass to orbit since 2023. Falcon 9 and Falcon Heavy already deliver the lowest cost per kilogram in the industry, but Starship is the real step change. They're targeting a 99% plus reduction in launch cost versus historical averages, basically making the marginal cost of getting mass to orbit approach the cost of the propellant. That unlocks everything else. On top of that launch advantage sits Starlink. As of early 2026, they had over 9,600 satellites in orbit, about 75% of all active maneuverable satellites. More than 10 million subscribers, coverage in 164 countries, and they're already rolling out direct-to-cell capability. Next-generation V3 satellites will deliver over 20 times the bandwidth per launch once they start flying on Starship. This is the only global low-latency network that actually works at scale today. Then comes the AI layer. They acquired xAI, built the world's largest coherent supercomputer, Colossus, at roughly 1 gigawatt, signed major compute deals with Anthropic and Google, and are already planning orbital AI data centers. Because they control the rockets, the satellites, and the intersatellite laser network, they're the only ones who can actually put high-power compute into orbit at meaningful scale, using free solar power and radiative cooling. Put it together, and the near-term addressable market they show is already in the multi-trillion range, roughly $6 trillion across space, broadband, mobile, and AI infrastructure, expanding toward $28 trillion when you include the full enterprise AI opportunity. Longer term, Starship opens completely new markets: point-to-point Earth travel, lunar manufacturing, in-orbit manufacturing, and eventually the Mars economy. The model is simple and repeatable. Use unmatched launch capability to scale new markets, vertically integrate all the way to the customer, drive costs down with the algorithm, generate cash, and reinvest. That's how a company that was once just a rocket company is now positioning itself as the infrastructure layer for the next several decades of human progress, both on Earth and beyond it. That's the fundamental long-term story. All right, so now that we've gone through the actual Q2 numbers and the underlying fundamentals, let's talk about what Wall Street is pricing in for SpaceX. According to data from Stock Analysis, the latest poll of 35 analysts from S&P Global shows a consensus rating of buy. The average 12-month price target sits at $223. That's a projected upside of about 79% from where the stock is trading right now. Just to put the range in perspective, the most bearish target is $62. That's more than a 50% drop. The median target is around $202 to $203. And the most bullish call is all the way up at $800, which would be over a 5 times from current levels. So the street is clearly leaning bullish overall, even though the spread between the high and low targets is massive. Now let's look at where the stock is trading. SpaceX is currently trading at $125.33. After earnings, it's down over 6.7% in after hours. Market cap sits at roughly $1.65 trillion. The company is still unprofitable on a net income basis, which is expected given the heavy investment phase. The stock has been volatile since the IPO. It ran up hard early on, then pulled back significantly, and is now trying to find a base around these levels. So here's my personal take. I like this stock. SpaceX has a rare combination of assets: absolute leadership in launch technology, a rapidly scaling Starlink network that's already generating real profits, and now a serious position in AI compute with a clear path to orbital data centers. The near-term addressable market they laid out is already multi-trillion, and when you include the full AI opportunity, it expands toward $28.5 trillion. Very few companies on the planet have that kind of runway. Yes, they're still investing heavily and the stock is volatile, but the underlying businesses are executing at a very high level, and the long-term opportunity looks exceptional. For me, this is one of the more interesting long-term investment opportunities in the market right now, and I think the pullback after earnings is simply a buying opportunity to get the stock at a cheaper valuation. If you found this video helpful, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. And as always, remember to do your own due diligence before making any investment decisions. Thank you for watching, and happy investing.